What's up investors, and welcome back to the channel. Before we get into the video today, I want to say thank you. In the past week we've just hit 3,000 subscribers. You guys are amazing, I appreciate the support so much, and I feel blessed to have you as subscribers to the channel. Now if you follow the channel, you know that I usually cover one stock in these videos and go into a lot of detail, but today we're going to do something a little different. In the past few weeks we've seen some huge gains in the biotech pharma industries. There have been some incredible one day 100% gains. So I decided to find the most exciting pharma stocks out there with the most upside potential. All the stocks in this video will not only have my opinion, but will also be backed up by analyst ratings and price targets. So today we'll be looking at 3 of the hottest stocks that nobody else is talking about that might be about to explode. We'll look at each of these and what they do. We will look at what analysts have rated these stocks and their price targets. And we'll briefly look at the financials of each company. Before we get into the video, it takes a lot of time to research companies like this. I would say I've analysed no less than 50 companies so far this weekend to find a few exciting ones. Now I'm bringing you my top 3. So I'd greatly appreciate if you could help me out and smash that like button. I'm aiming to get 150 likes, help me make it happen. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. It's 100% free and a great way to show your support for the channel. One of the best brokers where you can buy these stocks right now is Webull, who are giving away 2 free stocks worth over $1,700 if you open an account and deposit $100 using my special referral link. So check that out in the description below. And if you want to support my channel and the amount of work that I put in, check out my Patreon, where you can support me from less than 10 cents a day. Are you invested in any of these companies, and what price targets do you have? Leave a comment down below, I'm interested to know what you think. I want to point out that I'm not a financial advisor. This is not financial advice. Now let's get into it. The first company we have is VERU. VERU is a biopharma company with an oncology focus. The company's strategy is primarily to focus on the clinical development and commercialization of oncology drugs for the management of 2 of the most prevalent cancers globally, prostate cancer and breast cancer. Prostate cancer is the most commonly diagnosed cancer in men, and roughly 1 in 9 men will develop prostate cancer in their lifetime. Breast cancer is the most commonly diagnosed cancer in women, where 1 in 8 women will develop breast cancer during their lifetime. As well as a strategy of developing and launching high-value pharmaceutical products for prostate and breast cancers, VERU also plan to continue their growth of sexual health business to invest proceeds in the clinical development of the drug pipeline to access large premium oncology markets. On this side of the business, they have 3 products: the F2 female internal condom, Tadvin, which is designed to treat lower urinary tract symptoms, and Pre-Boost, which is used for the treatment of premature ejaculation. This was recently sold to Roman Health Ventures for $20 million. But the exciting side of the business from the investor's point of view, VERU have an impressive pipeline. Their lead pipeline candidate, VERU 111, is under investigation as a treatment for both prostate cancer, breast cancer, and is even undergoing testing as a potential treatment for COVID. The drug candidate has started a phase 2 clinical trial in the treatment of metastatic castration and androgen receptor targeting agent-resistant prostate cancer. The second application is the treatment of metastatic triple-negative breast cancer. And they have also completed a phase 2 clinical study of its efficiency for treating patients hospitalized with COVID and a high risk of acute respiratory distress syndrome. These have important dates coming up later this year. And another drug that the company has developing for the treatment of breast cancer is enobosarm, a selective androgen receptor which could potentially treat breast cancers resistant to current endocrine therapy. The company plans to start a phase 3 study in the coming months, with data expected in the second half of 2023. So what do the analysts think of VERU? Well, 4 Wall Street analysts have set 12-month price targets for the past 3 months. The average target is $21.33, with a high forecast of $24 and a low forecast of $19. The average price target represents a 171% increase upside from the last price of $7.87. Looking at market beat, we can see that VERU is currently in the lower quarter of both its 50-day range and its 52-week range, which suggests huge upside potential. They have market capitalization of over $600 million and a decent average daily volume. And we can see here the most recent ratings have been set by H.C. Wainwright and Jefferies Financial Group, who have both reiterated their ratings and price targets of $19 and $21 respectively. In fact, every price target here over the past year offers at least 100% upside potential. Looking at the company's most recent quarterly report, we can see that they have total assets of $181 million, which is primarily made up of cash and cash equivalents of $136 million. In contrast to this, we can see that they have liabilities of only $25 million, giving VERU an asset to liability ratio of more than 7 to 1. This is a fantastic financial position for a company in this industry. Note that there is a huge improvement from the September 2020 figures, and this is due to net proceeds of $107 million from a public offering back in February at a price of over $15 per share. Looking at the income statement, we can see that revenue is up on the prior year, with revenue of $27 million giving a gross profit of $21 million. After deducting operating expenses, VERU has an operating income of $17 million, giving a total net income of $14.3 million for the 6-month period ended March 31st. Now, if we remove the gain on the sale of Pre-Boost, we would actually have an operating loss of $3 million here for the 6-month period. What's important is the fact that they have $136 million of cash, which means they have enough cash runway to last into the foreseeable future. My second stock is FREELINE Therapeutics. This is working on gene therapies for debilitating chronic diseases, including bleeding disorders. Their focus is on developing treatments of monogenic diseases with high unmet need, following by expansion to address diseases requiring high protein expression. This is a UK company that is listed on the Nasdaq under the ticker FRLN. The company has 4 drugs in their development pipeline, 2 as treatments for haemophilia, 1 for Fabry disease, and 1 for Gaucher disease. 3 of the company's drug candidates are in clinical trials. FLT190, under investigation as a treatment for Fabry disease, is in the phase half-dose finding study, with data expected to be presented before the end of the year. FLT201 is also in the same phase for Gaucher disease. And finally, FLT180A, a drug candidate under investigation as a treatment for haemophilia B, is also in the same phase and on track to initiate trial sites by the end of the year. So what do analysts think about FREELINE? There are 6 Wall Street analysts offering 12-month price targets for FREELINE Therapeutics. The average price target is $24.50 with a high forecast of 32 and a low forecast of 17. The average price target represents more than 198% upside from the last price of $8.21 and has a consensus rating of strong buy. Looking at market beat, we can see that FREELINE is currently at the very bottom of its 50-day and 52-week ranges, suggesting that this stock could be at its lowest possible point right now. This stock also has very low average trading volume and a market capitalization of less than $300 million. So this could see some very large movement in price on positive news. We can see that there is a number of analysts covering this stock this year, with price targets ranging from $17 up to $30 as recently as May. With the majority of analysts offer buy ratings, these projections offer huge upside on the current price of only $8. The most recent financials that I can find for this company is their last annual report that was published at the end of March. So looking at the balance sheet, we can see that they have total assets of $268 million compared to total liabilities of just $18 million, giving them a huge asset to liability ratio of over 14 to 1. And the majority of this is made up of cash of $230 million. This cash is vital because, as we can see here, this is a pre-revenue stage company. They have very large research and development expenses and a net loss for the year of $96 million. This means they have enough cash runway for the next 3 years if they are to continue to suffer such high losses. However, as we can see here, looking at the past 3 years, the loss for 2020 was unusually high. So expect the cash to last for more than 3 years. The third company we're going to look at is REDHILL Biopharma. This is a specialty biopharmaceutical company primarily focused on gastrointestinal and infectious diseases. This is a multinational company based across Israel, Canada, Europe and the US that is listed on the Nasdaq under the ticker RDHL. REDHILL's pipeline includes several drug candidates in advanced clinical development stages, addressing clear medical needs. REDHILL's drugs are largely de-risked and are potentially of lower cost and faster to market than new chemical entities under development. REDHILL's products are based on several technology platforms and address several disease targets, thus providing for risk diversification. They have an active product line, 6 drug candidates at the clinical stage of research and development, and 3 products with approval in the US or globally and now in commercialization process. And we can see here that these approved drugs are Talicia, Movantik and Armcolo. And it's fantastic to see that the company has a track record of getting these drugs approved. I highly recommend checking out this June 2021 investors presentation on the company's website if you are considering investing. In this presentation they go into detail on all the commercial products and candidates. And we can see here that the company is actively releasing press releases recently. Only last week their drug candidate inhibits COVID-19 variants in preclinical study. So what do analysts think of REDHILL Biopharma? Looking at tip ranks, based on 3 Wall Street analysts offering 12-month price targets for REDHILL in the last 3 months, the average price target is $21.67 with a high forecast of 26 and a low forecast of 16. The average price target represents a 210% upside from the last price of $6.98. Then over on MarketBeat we can see that REDHILL is currently on the higher side of its 50-day average, but that it is near the bottom of its 52-week range, and they have a market capitalization of only $300 million. We can see here that over the past few months there have been several analysts covering REDHILL. All of these have reiterated their buy ratings and have set price targets ranging from $16 up to $23. The most recent of these was set by H.C. Wainwright the day after the press release regarding Opaganib, where they reiterated their price target of $23. This price target offers around 300% upside from its current price of only $7. Looking at the most recent financial statements, which is from Q1 up to March 31st this year, we can see that REDHILL have total assets of $220 million, of which $76 million is made up of cash and cash equivalents. They have total liabilities of $167 million, but the majority of this is made up of non-current, with current liabilities accounting for $66 million. This gives REDHILL a current ratio of nearly 2 to 1 and an overall asset liability ratio of 1.5 to 1. Looking at their income statement, we can see that revenue has greatly increased from 2020 to 2021, with net revenue at $20 million in the first quarter of this year compared with only $1 million in the same period last year. Selling and marketing expenses is the largest expense of note, resulting in an overall loss of $22 million in Q1. However, it's worth noting that this is a company that has only just begun to commercialize their approved products. So it is normal to have this high marketing expense, and I would expect the revenues to increase in the coming periods, and analysts certainly agree with this too, given the price targets that they have set. So that brings us to the end of the video. I hope you enjoyed it. Drop it a like if you did. If you've watched all the way through, then fair play. I hope I've shared some information with you that you weren't already aware of, and I hope you found value in this video. If you are looking to buy any of these stocks, remember Webull are giving away 2 free stocks if you sign up and deposit $100 using my special referral link. So make sure you do that. Sell those shares and then buy the stocks you really want. It's basically free money. And if you're new around here, remember to hit the subscribe button and bell notification. Follow me over on Twitter and join the new Facebook group. All links below. Are you invested in any of these stocks? And what are your price targets? If any one of these companies really interests you and you want me to do a more detailed video on just one of these, drop a comment down below and I'll do that. As I said before, I'm not a financial advisor. This is not financial advice. These videos give my opinion and the opinions of analysts. If anyone is looking to buy into any of these companies, I encourage you to do your own research. Thanks for watching the video. Catch you in the next one.